Hello guys, welcome back to the channel. Today we'll be continuing with our lesson about market structure. Yesterday we looked at the nature of the market, how the market moves. We saw that the market moves in impulse, correction, impulse, big correction, impulse. Basically, the market moves in two phases. It's either in a impulsive phase or a corrective phase. Impulse correction, impulse, and as it is making those impulse correction, it usually forms patterns. Using these patterns, we can know whether the market is about to reverse or to continue in the same direction as it was going. So these patterns are divided into two. They are reversal patterns and continuation patterns. So we will start with continuation patterns. We will we'll just go through the most common patterns. The first continuation pattern that we'll be looking at is the bullfrog. The bull flag resembles a flagpole, hence the name the bullflag. The bullfrog price action will impulse up. It will impulse up and form a sideways flag that signals to us price is ready to impulse up again. The next continuation pattern is the bear flag. It is basically the opposite of the bull flag. Price will impulse down and then form a sideways pattern and then impulse back down. The next pattern is a flat flag. A flat flag, it is just a bull flag or a bear flag that is flat. As you can see, the bull flag, it looks like it's descending a little. The bear flag, it looks like it's ascending a little. But for the flat flag, it's flat. Yeah, which are very profitable, but they are not very rare in the market. But these two, bull flag and bear flag, they are very common in the market. The next continuation pattern that we'll be looking at is the symmetrical triangle. It resembles a flag that is being compressed. As you can see, the market impulse up, and then it's as if the price action is being compressed, and then it will just impulse out of the structure. The next pattern, which is still a continuation pattern, is the expanding triangle. The triangle expands outwards. It's just the opposite of the symmetrical triangle. The symmetrical triangle is as if it's being compressed, as you can see, and the expanding triangle, the the price action, it's as if it's expanding outside. It will come, it will impulse up and then expand, and then on the last touch, it will signal to us that it's about to impulse back up, and then it will just impulse. The next patterns that we'll be looking at are reversal patterns. On reversal patterns, the first pattern that we'll be looking at is the ascending triangle. The typical characteristics of an ascending it's an ascending channel. Sorry, this typical characteristics of an ascending channel involves three touches, as you can see. One, two, three. On both bottom and top, paired with corrective nature throughout, indicating a potential reversal of price in play. You see, as you can see here, it impulsed up and then touch the first touch on the trend line here, second, third, and then after the third touch, it impulsed down. It reversed. The second pattern is the descending channel. A descending channel is very similar and involves three touches on both the bottom and the top, paired with corrective nature throughout, indicating a potential reversal of price in play. Looking for buys as price reaches a potential reversal area. We'll On the next lesson we'll look at the potential areas that price normally reverses from. These are double tops, double bottoms, triple tops. The next pattern, let's finish this one first. The next reversal pattern is the rising wedge. A rising wedge is a reversal pattern that resembles a squeeze of price on its way up. Each touch on the pattern becomes closer together as it reaches further to the top of the pattern. It becomes more and more probable for reversal it is squeezing up like this. The next pattern is the falling wedge. Pri- uh, Price action on a price action on a falling wedge normally approaches an outline structural level and signifying an opportunity for a buy. It is very similar to an ascending channel, although you can visually see you can visually see that price is being squeezed within the structure of a wedge, pushing price toward downside on the breakout and confirming of the pattern upside. The next pattern we'll be looking at is the head and shoulder. This right here. The head and shoulders pattern is one that is used in many different strategies and is common. It's a common pattern market, right? It resembles an actual head and shoulder. As you can see, the price came up from the shoulder, which normally they are normally found on a double top or triple top area. It comes up from the left shoulder and then the head goes up to retest the double top area, comes back down and then forms like a neck here where I've drawn this line. And then the right shoulder goes back up to test the double top area, but it won't reach up there on the neck. If it reaches on the neck, it ceases to be a head and shoulder. After it retests the area, it will go back down and break the shoulder. The next pattern is the inverse head and shoulder. It's just the opposite of the head and shoulder. Normally the prices comes down from the left shoulder and then the price goes lower, forms the head, goes back to the neck area, comes down to retest the head, but it won't reach the same level as the head, and then it impulses back up and the market reverses. The next pattern is the double top. The double top is the second rejection of the top of a structural significant area, with a breakdown confirming the reversal. You see, the price was going up, it reaches this area, went back down, and then it went back up again, but it never broke this area. Sometimes it breaks just a little, and then it reverses back down, and it impulses back down. The double bottom is just the opposite. It's just the opposite of the double top. The prices normally come down, goes back again like it's forming a continuation, comes down again. It won't break the double bottom, sometimes it just breaks a little and then impulses back up, forming a double bottom. So guys, that has been our class today. Tomorrow we will look at these structures on the real charts, because these are just drawing, these are examples. Tomorrow we will look at them on the real charts. So thank you guys for attending the class. If you have any question, ask them down there on the comment section, and please subscribe, and thank you for watching.